I'm going to attempt to do a little recap here. I haven't done one in a while. If you guys like these, let me know. I can try to keep up with them as much as I can. I love talking stocks. I mean, probably like a lot of you guys, I'm an introvert by nature. That's why a lot of us become traders. But when it comes to trading, I can't keep my mouth shut. That's all I talk about. That's all I think about. My wife will be like, honey, look at the beautiful mountains out there. And I see a triple top. She's looking at the beautiful mountains. I see like a head and shoulders pattern developing. So this is trading for me. Very fun. Love talking about it. If you guys like the recaps, I know I do the live streams in the morning. Some people can't be there for the live streams, but you're still a part of the green team, and maybe you want a condensed version of the day, and I am more than happy, trust me, to do these recaps when I can. I got 2 little kids. It's summer, so I'll try to keep up with these if you guys like them. Let's dive straight into today. Okay, today was fairly clean. I woke up and, let me get back to the close-up, sorry, story time. I woke up feeling pretty good. Oftentimes our feelings, how we feel, actually does have a significant impact and implications on our trading day. If you wake up kind of last second, you're groggy, you're not in the mood, or something's going on in life, it does have implications on your bottom line performance. Well, today I was feeling pretty good. Over the weekend, I was doing a lot of thinking. What am I doing well at? What am I struggling with? And one of the struggles really for me has been, I stop out a lot. A lot of trades that would work out, I stop out at the top. Those are my big drawdowns too, stopping out at the top. So I was thinking about it, and I was watching some veteran trader interviews, and something clicked with me. It's like, you have to set your stop outside of these normal trading ranges where the liquidity oftentimes is. So if I set the stop outside of that into abnormal areas where that liquidity is oftentimes not found, it's going to prevent me from getting stopped out a lot. But that's going to come with inherently risking a little bit more capital, right? Doesn't have to. So what I'm trying to do and attempt here is size down a bit and widen out the stop. And rather than starting with a single entry position of, let's say, 1,000 shares, I want to break it apart. So let's break apart, let's say the edge is presenting itself. Well, let's start the position with a feeler. They call these feeler positions. So you'll break it apart into, let's say, 250 shares. 100 shares. And then you could size into it. Because some of these names actually do break up and through certain key levels, those lines on the chart, but oftentimes we will get a retracement. Most of the time we do know what's going to happen, right? But you cannot trade most of the time. That's when you blow up, when you become overly convicted on these names. The ego trades for you. You end up losing more capital than you should. We got to keep our sizing consistent. That's going to equal consistent results. Not just the sizing, but as far as the trading goes as well. We can't have random trading. Random trading is going to equal random results. So there's a lot to trading, guys. You got to identify your edge. You got to have the discipline to unlock the potential with that edge. You got to have the risk management, to protect your profits. You got to have consistency to really compound it. There's a lot to trading. So one thing I've stepped into today saying is, I know I'm in control. I'm ultimately in control. You got to be. You don't know what the market's going to do. It can be irrational longer than you can be solvent. But I know what I'm going to do when faced with irrationality. I'm in control here. So there were a few tickers that popped up today. I like the hangovers. The hangovers I look at initially right at the start of the day. If you don't know what the hangover is, look in the description below. There were a couple of those plays. MCVT, I like this one. It was a hangover setup. You can see my chart here on it. This one kind of backside more than a hangover. We had popped up from like $1 something on Friday to up and over 13, but we had a lot of longs kind of trapped in this name up towards 10. So I actually started this real small, just like 35 shares and ended up making like 30 some dollars, but I was planning on sizing it up towards 10, 10, 20 being the risk. So today, here's the results. I made, $112 after fees. $100 is kind of my goal for the day. I sized appropriately for that. I may trade 10 times, and, I might be looking for 30, 40, 50 bucks per trade, and, a similar risk. Some of the names I may give a little bit more risk, 60, 70, $80 to, but if the hand looks a little better, like the pocket pair ace hand at the poker table, if the hand looks a little better, deserves a little bit more risk, I'll give it to it. But really, I'm trying to trade the probabilities. Not focus and laser in and tunnel in on one ticker, but trade the probabilities, a series of trades, rather than tunneling in, marrying one ticker. Trade that really hurt me today was this SMX. This Do you guys ever add to winners? Sometimes those can be the biggest kind of trades, but when we are in like a time period where everything reclaims and there's a lot of manipulation, tickers are overcrowded just by the nature of the summer. Summer trading. SMX, I like this one for a backside trade. So I'll pull up the chart here, Thinkorswim for you. SMX, this was my chart. I had a nice little descending triangle. It was overbought from the prior day. I shorted this kind of at the open. It cracked this 275 bottom support line right there, and I added into it, kind of the risk being, back up and over 275 here. So I added literally in at the bottom. It's so painful. Sized into it, that is. I sized into this name, and then I just had to stop out of it, on this pop-up. Although it came all the way back down, and then it went all the way back up again towards 330, all the way back down. And we saw that kind of action even on VWAV today, which I took a few stabs at. I was 2 for 3 on this name, but it was not an easy name to trade. VWAV was a tricky ticker. It kept like trapping shorts, looking weak, and then squeezing up. Now, the thing with VWAV is it's a recent IPO, so if you're a technical analysis trader, there's not a lot of past chart history to look at on this name, which may signal to you, don't take the trade. Because we only have like a couple weeks of data here. There's not a lot to look at left of the chart. I love technical analysis. I'm more of a technical analysis trader, but I thought the hand was still decent, so I took a few stabs here, reduced the risk. I wasn't trading huge size here, and took some profits the first trade, took a little bit the second, and then the third I stopped out of, although I was up a whole point on it. And that's something I've been mulling on, as well as, not looking for these home run trades, not looking for hitting the exact top. If you're up a point, take some profits off and then hit it again on pops and keep taking profits on pullbacks. So you're not trying to predict where's it going to be in today. When you're making money, take some profits along the way and leave leftovers. I was trying to leave leftovers today. It actually worked out. Would have worked better on LIDR. Here's another ticker I traded. LIDR. This one I was not getting the top of it. I waited for kind of confirmation here. I liked LIDR. If you go back and watch my stream today, I was even saying there's a trade here, but it's kind of like I'm a little 50-50 because shorts were trapped on LIDR from last week. It was a tricky name to trade, and we did get that morning spike on it, and it was met with some news. Some offering news came out on it. And then we saw it halted down. It opened up at this was tough. This was tricky. And as a long, if you guys are more of a long bias trader, and if you were longing it up here, man, I feel bad for those longs. When they come out with that news, and we've seen several this summer, like around 10 o'clock, 10:30, when all the liquidity's there, they're coming out with the offering news, and it's just killing traders, especially if they don't have hard stops on, and they're buying this thing up at 620, 30, and then she dumps, halts down 560s, and then it opens up in the teens. That's brutal for the longs. They go deer in headlights, paralysis by analysis, end up blowing up, their accounts. So I ended up shorting this on the pop, back up into the 530s, planned to scale it really up to 6. I knew there were a lot of longs underwater at that point. Ended up doing pretty well on LIDR. That was a decent setup. Then ALBT started screaming. This made the middle finger of death, the pattern, as I call it. Just kind of straight up, straight down. Scaled into this play. This was a decent setup. I can talk about this a little bit. ALBT. ALBT was coming up towards resistance. On these tickers, I keep my resistance lines mapped out. But if we look left to predict right. So we looked left of the chart, and we see a lot of upper shadows on the past chart history here. What does that mean? It means a lot of sellers are coming in when this ticker gets pumped up, forming those upper shadows. So we were upper shadowing up into a lot of resistance left of the chart here in the 450 60s. Not only that, the 200-day moving average was right in the 370s. So there were a lot of good indicators, variables. The stars were aligning for me to take a trade here. So I was sizing into it. I was fairly convicted here, which can be problematic, as I was saying. I was going to give this one probably $100, $150 risk here. ALBT, I was sizing it, and then she ended up pulling back. Volume ramped up, and then started fading real quick, and the name faded very quick. So that was ALBT. What else did I trade? XXII. XXII was a good one. This edge I really like to trade. XXII. Here's the chart here. Hit it in the 380s, took it down in the 350s, dropped down to the 320s. But this name was pretty good. XXII. James from chat mentioned this one, XXII. I like to trade this edge. When you get a ticker spiking up to a lot of the pre-market resistance, that's where a lot of the baggies are. A lot of bag holders, and they create a level of resistance. So I like to short into them. A lot of shorts come in. These bag holders try to get out with minimal losses, and the ticker continues to fade. So that was pretty much it on the day. The day was fairly clean. I sized down, like I said, a lot. VWAV, that ticker was just tricky. Trapping shorts. SMX was brutal. I sized in at the worst time right there, and then she curled back around, popped up, and I had to take the stop there. But outside of that, pretty clean day. Let me know how you guys did in the comments below. VWAV, are you long, short this? Clearly it was a long. Like after this right here, it sold off under 620, looked heavy, accumulated shorts, and then spiked up. I felt like it was probably a good long. I tried to hit it on this triple top. It pulled back and then spiked back up there too. So ended up being a long on the day, but I feel bad for the shorts here too, because when this thing got the volume behind it, man, it was shot up like a point or two. It was hard to get in and out of. These kind of tickers, I suggest having hard stops on. That way you don't get just crushed on those candlesticks that move a point or two at a time. You're still going to get slippage. It may not be as bad though. But guys, let me know what you think about these recaps. I can keep attempting to do them daily if you like them after we finish up our live stream around lunchtime. If you need an eval, you can get 5% off in the description below. Otherwise, guys, appreciate you. Happy trading. We'll see you tomorrow morning.